Today we shall see how the second PUC accountancy question paper would be in the annual examination. Let us solve a preparatory exams second PUC accountancy question paper. This year, due to COVID, some extra questions are added in section A, 2 more questions are added in section B. There is no addition. In section C, there is addition of 1 question, and in section D, there is addition of 1 question, and in practical oriented question, there is addition of 1 question. So, without wasting the time, we shall try to solve the whole question paper. I have uploaded question paper as well as its key answer. Its key answer I have typed just in 2 pages. You can download it. Link is given in the description below. In section A, there are 12 questions, out of which you have to answer only 8. Each question carries 1 mark. Question number 1 is, donation for specific purpose are always dash. So you have to fill in the blank. So here in the blank you have to write are always capitalized or capital. Question number 2, the agreement between the partners should be in. There are 4 alternatives. Correct choice is oral or written. Question number 3, name any one content of partnership deed. The answer is, there are so many contents, you have to write only one. The answer is name of the firm or name and address of the partners. Question number 4, there are 2 methods by which the capital account of partners can be maintained. You have to state whether it is true or false. Answer is true. Question number 5, give the formula for calculating gain ratio. So you have to write the formula for gain ratio. The formula for gain ratio is equal to new ratio minus old ratio. Question number 6, amount due to deceased partner is settled in the following manner. You have to write the correct answer. The correct answer for 6 is all of the above, because A, B and C, all the methods are followed to settle the deceased partners. So therefore, answer is all of the above. Question number 7, dash is the minimum number of members in a public company. Answer is 7. Then question number 8, expand DRFI. Answer is debenture redemption fund investment. Question number 9, fixed assets are classified as tangible and dash asset. Answer is intangible asset. Question number 10, comparative statements are also known as. Here 4 alternatives are given. The right answer is horizontal analysis. Question number 12 is, give an example for cash inflows from financing activities. Answer is issue of debenture or issue of shares. Anyone you have to write. Now we shall come to section D, where 8 questions are asked. Out of 8 you have to answer 5. Each question carries 2 marks. Question number 13, give the meaning of receipt and payment account. So here you have to write the meaning of receipt and payment account. It is a summary. Receipt and payment account is the summary of the cash book. It records all the receipts and payment irrespective of period and nature of the transaction. Question number 14, what are the methods of maintaining capital account? There are 2 methods of maintaining the capital account, that is a fixed capital system and fluctuating capital system. Question number 15, state any 2 rights acquired by a newly admitted partner. First right is right to share in the future profit, and second right is right to share in the assets of the firm. Then question number 16, give the journal entry for an asset taken over by a partner on dissolution of a firm. So here you have to write the journal entry. So journal entry is partner's capital account debtor to realization account, and you have to write narration also. Then question number 17, state any 2 features of company. So there are a number of features of company. You have to write any 2 features. For example, it is an artificial person. Company is an artificial person. and then it is a registered body, etc. You have to write any two. Then question number 18, mention any two items which are shown under the head reserve and surplus. You have to write any two heads which are shown in the reserve and surplus. For example, securities premium, general reserve, surplus, etc., etc. Then list any two techniques of financial statement analysis. There are 4 techniques. Out of that, you have to write any two: comparative statement, common statement, etc. Then what is cash flow statement? Cash flow statement is a statement which shows the inflow and outflow of the cash. Now we shall move on to the section C. In section C, 8 questions will be asked. Each question carries 6 marks. We have to answer any 4 questions. Question number 21 is on the preparation of profit and loss appropriation account. So draw the format of the profit and loss appropriation account. So here 2 partners are there, Sudha and Prashant. They have started partnership business on 1st April 2020, and their capital is 1 lakh and 80,000 respectively. They are sharing the profit and losses in the ratio of 2:1. And for the year ending 31st March 2021, they have earned a profit of rupees 45,000. Before allowing some adjustments which are given below, you have to show it in the profit and loss appropriation account. Prepare the profit and loss appropriation account. First, record the current year's profit on the credit side by P&L account 45,000. And then see the adjustment number A, interest on capital at 6%. It has to be debited to the P&L appropriation account because it is a loss to the firm, so it should be debited on the in the P&L appropriation account. So on debit side to interest on capital, Sudha 1 lakh into 6% means it comes to 6,000, and Prashant 80,000 into 6%, it comes to 4,800. So total would be 10,800. So show it in the outer column. Then adjustment number B, interest on drawings, Sudha 1,000 and Prashant 800. It is an income to the firm, so therefore record it on the credit side of the P&L appropriation account by interest on drawings, Sudha 1,000, Prashant 800, total 1,800. Then adjustment number C, yearly commission of Sudha is rupees 600. To Sudha, they are paying 600 rupees commission per annum, so therefore record it on the debit side. It is an expenditure to the firm, so record it on the debit side. Sudha's commission for full year is 600. Likewise, Prashant is given 1,000 rupees salary every month, so it is also an expenditure. Record it on the debit side. To Prashant's salary into bracket 1,000 into 12 in outer column 12,000 rupees. Now drawings are given. It is not necessary here. We are not supposed to record it in the P&L appropriation account. It is recorded in the partner's capital account. Sometimes just to confuse you, drawings would be given. If suppose interest on drawing we have to calculate, then we have to use the amount of drawings. Otherwise, there is no need of amount of drawings. Even then it is given, you just ignore it. And now total each side, debit side as well as credit side of the profit and loss appropriation account. If you total, credit side would be more, it comes to 46,800. Record it on both the side, find out the difference, and difference is 23,400. Since credit side is more, this is the net final profit. It has to be distributed among the partners as per the profit sharing ratio, that is 2:1. So therefore, 2 partners capital account, Sudha it comes to 15,600, Prashant it comes to 7,800. So likewise, we have to solve this profit and loss appropriation account. There will be 6 marks for this question. Each item carry 1 mark. Remember, in examination, if you write all these 6 items correctly, then you will get 6 marks. Okay. Next, question number 22. Question number 22 is on interest on drawings, calculation of the interest on drawings under shortcut method. So here Ram is a partner and he has drawn rupees 2,000 every month, and the rate of interest is 12%, and 2 conditions are given. Condition number A is if he withdrew the amount at the beginning of each month, what would be the interest? And condition number B is if he withdraw rupees 2,000 at the end of each month, what would be the interest we have to calculate? First, let us see if he withdraw in the beginning of every month rupees 2,000. First, you have to write the formula. There will be 1 mark for formula. So formula under shortcut method is IOD, or interest on drawings, is equal to total drawings into average period into rate of interest into unit. Unit means 1/12. So now we shall see Here interest on drawing is equal to total drawings, means every month he is withdrawing rupees 2000. For 12 months he drawn, it means 2000 into 12, it comes to 24,000. And then average period, how to calculate average period? To calculate the average period, we have to consider maximum months outstanding and minimum months outstanding. If a partner withdraw at the beginning of each month, the maximum month outstanding would be 12 and minimum would be 1. So 12 plus 1 is equal to 13 upon 2, means it comes to 6.5. You have to just remember it. Then 12 upon 100 into 1 upon 12, it comes to 1560. On the other hand, if he withdraw rupees 2000 at the end of each month, then the formula is same. Interest on drawings is equal to total drawings into average period into rate of interest into 1 upon 12. Here only the average period changes. 24,000 is the total drawings into 5.5, because he is withdrawing at the end of each month. First drawing there will be outstanding months of 11 months would be the outstanding, and the last drawings there will be 0 months. So 11 plus 0 is equal to 11 upon 2 is equal to, it comes to 5.5. So average period is 5.5 into 12 upon 100 into 1 upon 12 is equal to 1320. So here 3 marks for each condition will be allotted. Then question number 23. So here you are asked to find out the sacrifice ratio. So first of all, we have to see what is the old ratio. Old ratio is the 4:3, and old partners are Mohan and Rohan. Then they admitted Kishore, and new profit sharing ratio is 4:7:3. So to find out the sacrifice ratio, we have to write first the formula. Sacrifice ratio is equal to old ratio minus new ratio, and we have to find out the sacrifice ratio of the only old partners, that is the Mohan and Rohan. Let us find out the sacrifice ratio of Mr. Mohan. So sacrifice ratio of Mohan is equal to his old ratio is 4/7 minus new ratio is 7/14. Then find out the LCM. LCM would be 14. By applying the LCM, if you sum up, it comes to 1/14. Likewise, sacrifice ratio of Rohan, his old ratio is 3/7 and new ratio is 4/14. So 3/7 minus 4/14. Here also LCM is 14. When you simplify the answer, when you calculate, answer will come 2/14. So therefore sacrifice ratio of Mohan Rohan is equal to 1/14 is to 2/14. Cancel 14, the answer would be 1:2. So here the allotment of marks will be 1 mark will be given for formula and 1 mark for answer, and remaining 2 marks will be allotted for the calculations. Means for Mohan's calculation 2 marks and for Rohan's calculation 2 marks. In this way 6 marks will be allotted. Question number 24. Question number 24, here you have to prepare deceased partner's capital. A is the deceased partner. So draw capital account of the A. So then after drawing the capital account, first you record the opening balance of the A at the time of death. So here it is given in the problem, A and B, A, B and C are the partners. They are sharing the profit and losses in the ratio of 2:1, and their capital balance on 1st 4/2020 stood at rupees 1,50,000, 1 lakh and 50,000 respectively. Out of these 3 partners, A died on 1st January 2021, means after starting of the accounting year. He died after 9 months. He died. So therefore, that period we have to consider while calculating some amount. So and partnership deed provides the following. According to partnership deed, what else we have to pay to the deceased partner is given here. So what you have to do is first you draw the profit and you draw the capital account of A. A is a capital account, and write down his opening balance of the capital. It is given in the question. It is 1,50,000. So therefore, by balance brought down 1,50,000. And as per the partnership deed, he is entitled for interest on capital. So it has to be credited to his account. So write by interest on capital into bracket. His capital is 1,50,000 into rate of interest is 9/100 into he survived for 9 months. So therefore, we have to give him interest only for 9 months. So therefore, into 9/12. It comes to 10,125. Then he is entitled for a salary of rupees 1,000 per month. So we have to give him salary of rupees 1,000 per month for 9 months. So therefore, by salary 1,000 into 9, it comes to 9,000. And then A's share of goodwill, we have to credit his goodwill. So his goodwill is given below. So the goodwill of the firm is 50,000. Total goodwill of the firm is 50,000 rupees. So out of that, his share would be 50,000 into 2 upon 5, it comes to 20,000, and this 20,000 would be contributed by the continuing partner, that is B and C, as per the gain ratio. If the gain ratio is not given, the old ratio of the old continuing partner would be the gain ratio. So old ratio is here 2:1. So therefore B and C contribute 20,000 in the ratio of 2:1. It comes to 13,333 and 6,666. Therefore by B's capital 13,333, by C's capital 6,667. Then his share of profit up to the date of death. So he gets share in the accrued profit. So accrued profit for 9 months have to be calculated. Here the profit of the last year is given 24,000 per 12 months it is, then it would be 18,000 per 9 months. Out of 18,000 he will get his share, means 2 upon 5. So that would comes to rupees 7,200. So that would be recorded as by P and L suspense account. After recording all the entries, you have to total each side. So credit side would be more, it comes to 1,96,325. Record it on both the sides, find out the difference. The difference will be 1,96,325, and that has to be transferred to his executor's account. So therefore write to A's executor account. Then question number 25. Question number 25 is on the issue of debentures. You have to pass the journal entries. Here the name of the company is Krishna Company Limited. First you write the name of the company at the top, and then you draw the journal format. So here 10,006% debentures of rupees 100 each are issued and payable rupees 20 on application, 30 on allotment, 50 on first and final call, and you have to pass the journal entries up to the stage of the first and final call money received. Means you have to record 6 journal entries. The first journal entry is for the receipt of the application money. So journal entry is bank account debtor to 6% debenture application account. Amount comes to rupees, and 10,000 into 20 means it comes to 2 lakhs, and you have to write the narration also for application money received. Then second journal entry is for transfer of the application money to the debenture account. So journal entry is 6% debenture application account debtor to 6% debentures account, amount 2 lakh narration for transfer of the application money. And third journal entry is for the allotment money due. Journal entry is 6% debenture allotment account debtor to 6% debenture account. Amount comes to 10,000 debentures into 30 rupees means 3 lakhs. Then fourth journal entry for the receipt of the allotment money. Journal entry is bank account debtor to 6% debenture account. So here full amount is received. So therefore the same amount 3 lakhs you have to record and then write the narration. Then fifth entry is for first and final call money due. The journal entry is 6% debenture first and final call account debtor to 6% debentures account. The amount is 10,000 debentures into 50 rupees. It comes to 5 lakhs. So record debit side 5 lakhs and credit side 5 lakhs. The last journal entry for receipt of the final call money bank account debtor to debenture first and final call account 5 lakhs and record the narration. So here for each entry there will be 1 mark. Then question number 26. Question number 26 is you have to prepare the statement of profit and loss for the year ended 31st March 2021. So draw the diagram of the statement of profit and loss. As per the Companies Act, you have to prepare the statement of profit and loss. So therefore draw the diagram, draw the format. So in the format, first column is the particular, second one is the note number, and third one is the amount. So here 2 sections will be there, one income section and the second one is the expenses section. In the income section, first we have to record revenue from operation. So revenue from operation, so here revenue from operation is not given directly. We have to find out the revenue from operation by preparing the note. So note number 1, you can see the note number 1. So sales are given here. So sales means cash sales as well as credit sales are given. So cash sales is 2 lakh and credit sales is 3 lakh, as well as sales return is also given. First you total cash sales and credit sales, it comes to 5 lakhs, and less sales return 20,000, it comes to 4 lakh 80,000. That would be the revenue from operation. So therefore you write revenue from number 1, revenue from operation, note number 1, 4 lakh 80,000, and number 2, other income, there is no other income, so the total revenue will be 4 lakh 80,000. Now second section is the expenses. Here what are the expenses given, that much only we have to record. First, cost of material consumed is given, so if write for number 1, cost of material consumed 3 lakhs. Then depreciation and amortization, it is not printed here, I have given on the side of the problem. You have to depreciate building and machinery at 10%. So you prepare a note. So note number 2 is prepared. See here, depreciation on building at 10% means it comes to 20,000, and then depreciation on machinery at 10%, it comes to 15,000, total 35,000. So therefore number 2 depreciation and amortization, note number 2 is equal to 35,000. Then bad debt comes under the other expenses. You need not have to write the note, just you can directly write the other expenses. In that you take the bad debt is rupees 5,000. So the total expenses is 3,40,000. If you deduct total expenses B from total revenue A, the profit before tax would be 1,40,000. Calculate tax at 30% given in the question, it comes to 42,000. If you deduct 42,000, the 98,000 will be the profit after tax. So here marks would be allotted item wise. So note is also there. So for note also marks would be allotted. Question number 27 is about the calculation of the current ratio and the quick ratio. All the informations are given directly. First write down the formula for current ratio. Current ratio formula is current assets upon current liabilities. Here current asset is 2,40,000 upon current liabilities 60,000. It comes to 4:1. Then quick ratio. For quick ratio, formula is quick assets upon current liabilities, but quick assets are not given. We have to calculate. How we have to calculate? Quick assets is equal to current assets minus a stock. So 2,40,000 minus 1,20,000, it comes to 1,20,000. Then quick ratio is equal to 1,20,000 upon 60,000, it comes to 2:1. So this is the question number 27. Then question number 28 is about the cash flow. So here we have to calculate the financing activities. First one is the equity share capital. In the year 2020, there was 28 lakh, and in the year it is 35 lakhs. So first you draw the format of the cash flow. Number 1 is here equity shares are issued, because in the last year equity shares was 28 lakhs. Now in the current year it is 35 lakhs, means there is a difference of 7 lakhs, means 7 lakhs extra equity shares are issued. So therefore number 1 is proceed from equity shares issued is 7 lakhs into bracket 35 lakhs minus 28 lakh. Then number 2 is the bank loan. So earlier it was 12,50,000, now it is 7,50,000, means there is a repayment of the bank loan. So therefore repayment of the bank loan 12,50,000 minus 7,50,000, it comes to 5 lakhs. Then debentures, earlier 8 lakhs, now 10 lakhs are there. It means there is a issue of the debenture. So therefore proceed from issue of debenture into bracket 10 lakhs minus 8 lakhs, it comes to 2 lakhs. Then the final amount will be 4 lakh. It is called cash inflow from financing activities. So by this section C over. Now we shall move to the section D. So here 8 questions will be asked. You have to answer any 4 questions.